Hello guys, welcome to IS Traders. In this video, we'll be talking about Falcon FX Strategy. You all know I like to keep this simple. So guys, I'll be showing you guys how to deal with the market using the Falcon strategy, the easiest way actually. So without wasting much of our time, let's get started.
Alright guys, so just as you all know, Falcon strategy, you have to do a top-down analysis, to read price direction and understand what price is doing. It is always done what from top to bottom. But for keeping it simple, we will not be going to the daily time frame because this is targeted for day traders. So we're going to be doing what from the 4 hour time frame and then the 1 hour time frame and lastly the 15 minutes time frame, right? Because we're going to be using this strategy for day trading. Okay, so just like every other strategy, the number one thing you want to understand is what you want to understand what price is doing, right? What is the direction of price? Just like every other person will tell you, understand what market structure is. Now, for you to simply understand what market structure is, just like I've been saying in the previous Falcon content I've created for you guys, the number one thing you have to do is that when you hop on a particular time frame, your focus should be what on the last impulsive phase and then the last two swing highs and the last two swing lows after that impulsive phase. Alright? The last two swing highs and then the last two swing lows after the impulsive phase. So we have this guy to be the impulsive phase, right? We have that guy to be the impulsive phase, and then we have this to be what the first swing high, the second swing high, and then we have this to what the first swing low, and then the second swing low, all after this impulse. So if you have a connection with a trend line, you're going to have what a trend. So you're already having what a market structure. So your focal point should be what the first two swing highs and swing lows after an impulsive phase. When you are able to identify this, which is the current one, all right, the current impulse, the last impulse. So you have to identify the first two swing highs and swing lows after the last impulse on that particular time frame, right? If you're able to identify this clearly, then you are done with understanding market structure because it is all embedded into it. Whichever way these guys are facing is always going to tell you what price is doing. All right. Take for instance, if this isn't looking the uptrend and the structure on the time on the directional bias time frame or whatever time frame you're looking at, the price pattern is in a downtrend, it's also going to make sense because your focal point is what the last impulse and then the last two significant swing points after them, which is the last two significant swing high and the last two significant swing lows, right? So let's say price, let's just forget about the impulse for now, right? And let's focus on the swing point. So let's say the first swing is like so, right? We have the first swing here, we have the second swing here. These are what lower highs, right? And then we have the other one here, and then we have the other one here. These are what lower lows. Connecting these two, if you are to connect the swing point like so, it's going to be what we are going to be in a downtrend. Okay, we are going to be in a downtrend. So your focal point should be what the last two swings from both sides. That is how you're going to roll. So it's going to be something like so. The impulse is going to be like that. This impulse coming to create this, to that, and this. So we are in a downtrend here. So the price is going to, our focus or for when we're forecasting, we're going to anticipate price to be what keep creating what the lower lows and then the lower highs and then the lower lows like that to keep running what the downtrend, right? Forget about my drawing, please. To keep running what the downtrend. And similarly, if we are also to look at price like so, just make sure that whenever you're looking at you know your
It's 8 o'clock.
thank you, Samantha. Whenever you're looking at your directional bias, the focal point should be what the last two significant swing points, right? The last two significant swing highs and then the last two significant swing lows. This will tell you where the direction is automatically, all right? And then in order for you to identify this, you have to identify what the last significant impulse, all right? Like I said, I'm calling it last because I want you to know that it is the current one, all right? That has happened before whatever the market is doing right now. Because I always said to you guys that the current uh, pattern has the highest probability of playing out. So if you have to focus on the current pattern, you're going to have you're going to deal with price more effectively than looking at what price has done in the past, like diving deep into the past. Okay, so even if price is like so, you can if you could get to connect it, if we get to connect the structure, you will know that what this is an uptrend, right? I'm anticipating something like that. And if just make sure that your focal point is what the swing point. So if you are having the sideways and it's not highs and highs, just ranging, you're going to also understand that what this is the ranging phase. Okay, like that. So your focal point should be what the last two significant word swings, and then the impulse before them, which is going to tell you what either it's going to be a pattern or it's going to be a channel. So that's why I didn't say your focal point should be the last pattern or the last channel, because sometimes you might hop on the channel and what you see is going to be a pattern, and sometimes you might hop on the channel and what you're going to see is going to be what a channel. So we are not going to be focused on we have to always look for a channel, or we have to always look for a pattern, but we have to always look forward the last two significant swing points, and it covers for everything. So guys, let me illustrate on the chart how this is done. Okay, let me give us practical example. So I'll be using a trade I took on the 9th, I think. Started analyzing on the 8th on volatility 100 index 1s. Mind you, just as you all know, or every other person, most people use the Falcon strategy trading the forex market. It works in every market because it won't. Let me just say, every technical analysis approach work in every market because it is focused on understanding the Japanese candlestick, right? And almost all of these things we trade are being represented in this phase, in this Japanese candlestick way, right? With this type of candlestick patterns, right? If the A strategy or the B strategy or the C strategy work in a particular market which is represented in this candlesticks market, it should definitely work on the other side of the market technically, unless it has what fundamental elements also affecting the market. Just like this guy synthetics, it doesn't have any fundamental analysis. So what you want to do is just understand the strategy very well and how to put it on this market. So if you trade the forex market, you have to understand the Falcon strategy very well and also how to put it what with the fundamentals. Whatever market you trade, just make sure that your technicals, just remember or have it at the back of your mind that the technical way of analyzing these things are always the same within all of the market. The only thing you got to pay attention to is what the fundamentals does to it. So let's continue on the chart, right? So like I said, I'm going to be talking about this trade which I took on the 8th or the 9th or so. The 8th and 9th, because I think I analyzed on the 8th and then I took the trade on the 9th. All right. Yeah, I took the trade on the 8th and then I held till on the 15th. So because I wanted to make a video talking about this Falcon strategy is why I actually held this stuff this long, because many of you have been requesting for me to talk more about Falcon strategy here. So I'll be talking the both side Falcon and then the SMC. For those of you who are in my community, you know that we combine the two of them to be able to make effective decisions, right? So I'll be talking about both Falcon and SMC subsequently in my channel, not together though, but so that I can cater for those of you who use the Falcon strategy and also cater for those of us who use this SMC. So guys, on this channel on the 8th, right, we're going to look for 5 a.m. on the 8th because you all know that is when I hop on the chart. So it's 12, it's 4 a.m. and it's 12 again. 4 let's just hold on 4 a.m. right, because this is 4 hour. So like I said, for a top down analysis I do using the Falcon, I start from the 4 hour because I'm a day trader and I don't want to really stress into the daily time frame. All right, so the 4 hour time frame is what I start from, and then I go on the 1 hour to also filter the current direction, or to see if what my 4 hour pattern or structure is saying is being confirmed. And then I go to the 15 minute to filter the last phase, and then what I do or how I execute the trade is on the 1 minute, but that I use a SMC concept to execute that. Those of you in the community, you understand what I'm saying. So this is the entry for the trade, and you can all see that this is not the Falcon way of entry. This is an SMC way of entry. 4 a.m. This is what we had. This trading view doesn't replay, so there's no way I can replay, right? So we just have to play dump, and like this place has not happened yet. All right. So this is what we had on the 8th, and then we have what, like I said, what you want to identify when you're up on the chart is what the last significant impulse and then the last two swing points after them. The last significant impulse here on the 8th is what? This guy, this bullish impulse. This is the last significant impulse. This is the last significant impulse on this particular time frame, right? So this was the last significant impulse, and then the next thing I want to do, or the next thing you want to do is what? Identify what the last two swing highs and then the last two swing lows, which I always tell you guys are what the last two significant swing points. All right. So two significant swing highs, two significant swing lows. When you connect the dots, it's going to give you a trend. All right. So the last two significant swing high. The first one is what? This is the last. This is the first significant swing high. All right. This, and then this is the second significant swing high. Here we were just approaching the swing, so we cannot call it a swing until what it closes above below this guy, which is going to help us confirm that this swing is now confirmed, right? So what we had was this swing, and this is called the current phase of the market. So we couldn't mark this as a swing yet, right? So the next thing is here we have this guy, the swing low, higher low, and then we have this one, then we also have this, but all of these are embedded into one. If you understand the Falcon way of understanding swing point, right? Because it has not gone back to meet up the trend line here. So it only came halfway and dropped down, meaning what? It is not yet, meaning the whole of this is a particular swing point, right? So we have these two swings like that. We have the swing highs like those, 1 2, and then we have the swing lows, 1 2, right? So what we're gonna do is to connect the swing highs 1 and 2, and then connect the swing lows 1 and 2, right? So like I said, the whole of this is our swing low. Why? Because since price left here, it did not touch the other trend line before coming back to it. So it is all a particular swing. If you understand very well the Falcon strategy, you understand what I'm talking about. All right. So what we had is what it's kind of like a wedge because it's trying to converge, right? It's trying to meet up in a place. If I keep dragging these two, they're going to meet up and create an angle. So it's this is what we call a wedge because it's converging, right? So we have this particular structure, but if I'm talking about trend and just looking at into this particular wedge, you can see we are having what an uptrend. All right. Now, what we are anticipating is where the third touch because price is almost at the third touch, or let's just say price is already at the third touch here. So this is the third touch, and that's where we made the price, right? This particular candle. So after understanding this from the higher time frame, I know already from my Falcon strategy or the Falcon knowledge that when we have a third touch, we should be anticipating what a potential sell. And when the sell happens and it comes to interact with this particular trend line, if we have a significant bear break, right, then we should be anticipating what the 90%. We should be anticipating the 90%. All right. So this is going to be our key level, which is the lowest level on our structure. Then the highest level on our structure that is this guy, right, which has been just taking out, which is what taking out mass psychology or talking about liquidity. All right. So price came to collect liquidity and give us a third touch here. This is the highest level we had. And since price started to reverse, right, let's say this second one, our highest level shifted to be this guy here. All right. The lowest level is at the 90% because if price breaks significantly below, just like it did, the target is going to be what, 90%. All right. This is what we understand from this time frame, right? So the next thing we're going to do now is going to hop on the 1 hour time frame to get to understand if price is actually going to listen to the third touch, or if the third touch is actually going to hold on to price and make it drop from there. Because sometimes price might come to a third touch, give us a reaction because a lot of people actually want to trade because if you read price the Falcon way and you're just reading it for reading, you also just want to jump in when you see a candle. So it might give us a reaction and then boom, collect all the money before maybe finding its way down again. All right, so we need time frame to confirm that yeah, that particular direction in which the pattern is telling us that price should go, price is actually going that way already. Then we can now join. All right, so let's go to the 1 hour. Sorry about my voice. This is just in the morning. Should have recorded this content during the day yesterday, but it was rainy. So this is the 1 hour time frame, right? And what we want to look at is what the last swing and then the current structure, the current swing point, right? So like I said, this is the 4 hour, the 4 o'clock. So we have to keep to the 4 o'clock because we are still here. All of this have not played out yet, right? So what happened is that if we are to do pattern separation, we are going to have what the last impulse is this guy. This is the last impulse. This green, uh, push from this particular strainer. This is the last impulse, right? And then the swing points after the impulse is what we have. We have this one, and then currently where the market was, right? So also for the base or the lows, right? We have this low, and then we have this what higher low, all right? So what we're going to look is 1 and 2, right? And then also 1 and 2. All right. So these one are two separate swing. Why? Because when price left the first trend line, it came to this guy. After when it went back, it approached the trend line again before coming back. So these two are two significant swing points. But if price only came halfway and did not come back to interact with the trend line before coming down, then it is not. They are going to be what one swing. So we have this particular structure here, and you all know that when we have an impulse to a direction and then uh, a correction or the swing point rolling in that same direction, that it is what signaling a reversal to us. All right. So this is a reversal kind of structure right here. So we met here, and then we had this guy here. So for those of you who do the risk entry for Falcon, I'm sure you might have executed after this particular bearish candle here. And then maybe your stop loss was taken, maybe your stop loss wasn't taken. I don't know about that. So we have this 1, 2, 3. For me, we don't enter immediately because we are always conservative, right? So what I did was what, wait for price to break down, and after price broke down, after price broke through the pattern here, we know that what we are now looking for the sells. So when price broke through the pattern here, what we do is go back to the 15 minutes to filter the last structure, and then before we go back to the 1 minute to implement the entry using what, our smart money knowledge. So we go to the 15 minute, right? Remember, we are still on the 4 hour, right? We're still 4 o'clock, right? Here. So we go on the 15 minute. Price came to collect, you know, those people want to trade equal highs, collected mass psychology, and then we started to drop. All right. So the first thing I would have capitalized on was this guy, 1, 2, and then 1, 2. So the break of this particular structure here would have been a massive entry for us. All right. But somehow there was a delay, so I couldn't execute the trade early. But take note of this. There's something called pattern within or structure within structures, right? And whenever you see a price pattern, right, we have the impulsive phase, right, the corrective phase, we have more impulsive phase, and then corrective phase, impulsive phase, and corrective phase, right? Price pattern connected together provides or create price channels. All right, this is a very basic knowledge if you trade the Falcon FX strategy. Price pattern connected together create what, price channel, which is part of what you can use to capitalize while trading this particular system, right? I'm only giving you guys a brief of all of this stuff. In subsequent video, I'll be breaking down everything bit by bit. All right. So if you are here to subscribe, please don't forget to hit the sub button. Don't forget to like the video if you find it informative. Please share or comment in the comment section. All right. So this is the first price pattern in which I should have capitalized at the break of it, but I missed this entry, right? So after that, we have more of the patterns. If I'm to dive deep into pattern separation, right, we have more of the pattern, right? So we have this pattern, we have, you know, impulse here, we have this impulse, right? We have this correction, we have this impulse, the downside. Now connecting our last pattern with, the connecting all of the patterns we have with their impulses, right? We are going to have this 1, 2, which is what, a downtrend, right? This is a channel, and then we had one, and then I was anticipating the second one. So the one and then the second one is where I finally executed, because this is what, a price channel. These are price pattern within a price channel. All right. So as you can see, the entry, it is so. If I'm to look at it, it's a good sniper entry, but this entry did not come all from my Falcon knowledge. I used the smart money concept entry modules to execute this trade. That's why it's looking so tight. This is how the trade was executed, and the final target is supposed to be the what, 90%. Let's go back to 4 hour. It's supposed to be the 90%, but I kind of swinged and I forgot about it. I swinged and I forgot about it, so I was able to make with the lowest loss size. I think the peep cut was like 200 peeps, and then close at $40. All right. So guys, I hope this has been helpful. I hope this will lighten up your Falcon FX trading strategy knowledge. If you enjoyed the video, like I said, please don't forget to give us a like. Don't forget to say your comment. Thanks for watching and stay highest.